Hey everyone, this is Dan with Theta Trend. Today is Thursday, February 18th, 2016. It's about 2:23 p.m. or so. The market's closed 15 minutes ago. We're taking a look at a daily chart of the Russell 2000 right now, and everybody knows we had a little bit of a down day. Today the market was off 0.64%, 6 points roughly to end the day at 1004. Before we get too excited about this, I've been wanting the market to come back down or at least settle down a little bit in here so that the position would have some time to work. But before we get too excited about this, we need to put the pullback kind of into perspective. And even though we are in a bearish environment here, the potential to move higher and break up and above this 1017 level does still exist. I would say this was not a definitive down day in here. We didn't violate the prior day low. We did show some weakness, and that was good to see, and it helped the position for sure. Let's go ahead and drop down to the 65-minute time frame. So yesterday and still today at this point, we're kind of keeping an eye on this 1016 to 1020 level. If the market can get up and hold above that, we're looking for a run up to maybe the 1035, which is the top side of this box. On the downside, we're kind of looking around this 1000 level, and there are a few reasons. One is that there's this gap here from the prior day, and that gap still hasn't been filled, and so certainly the market could come down there and fill that gap. And I think there are a couple of other gaps down here that haven't been filled. But one of the things that's interesting to point out is if we hop over and look at the Russell 2000 index futures, the TF, and I'm not sure why this isn't loading right now. There we go. Let's go ahead and get rid of this Fibonacci. But this is our move higher from about the 936 in the futures versus 942 in the index. Here coming up to 1016, which is fairly similar. So the prices are fairly close, but this line here, this dotted blue line, and this is still a 65-minute chart. The only difference is that we're showing the extended session, so the overnight hours. This dotted blue line is the volume weighted average price week to date. So the volume weighted average price week to date is sitting right around this 999 level in the futures market, and that's right below where we closed today. We closed up here at about 1004, and this is the one-day volume weighted average price. So the market was finding resistance kind of around the volume weighted average price on an intraday basis, and that's the first time we've seen that in a few days. But the market still held up and above and closed above the week to date volume weighted average price. And so I guess my concern in getting really bearish here is that the market hasn't really definitively started to hurt the longs. Once the market gets down below this 999 1000-ish and holds that level, it's going to begin to hurt the longs and put a little bit of pressure on the average long to liquidate their positions. And until we see that break lower, we really haven't seen that happen. So it's just something to be aware of. It doesn't necessarily mean we will head higher, but it is kind of a level that I think is pretty important here going into tomorrow, which is Friday. So the market did find support just in front of this 1000 level on the index and just under it, tagged this week to date volume weighted average price in the futures today, and from there it pushed higher. So tomorrow the really key levels I think to watch are going to be down around 1000 and then up again around that 1016-ish. If we see the market stay within that range, there isn't really any new information. If we see the market definitively break either lower or higher from there, then we have some new information and we'll have to react. So let's go ahead and hop over and look at the position. The position's doing a little bit better today than it was yesterday. If you recall, we closed the day yesterday up around 1011 or so, which was right in here, and we had a little bit of a pullback. We had some decay come into the position. I did make one adjustment, but as we went into the close today, the delta is negative 14, gamma is negative 37, theta's all the way up to $60 a day, vega's negative 109, and the open profit now is about $15. And yesterday we closed the day drawn down about 170. So it was a pretty big swing in the P&L today. And some of that came about because of the short delta, and then also just the passage of time because the line really ticked up. Yesterday we closed here at 1011, and if we would have closed in the exact same spot today, we would have had an open loss of $90 or so today. So the line has definitely ticked up just in the past day. The adjustment that I made earlier in the day was to roll up one of the 955 puts to 965. So if we come in here, we can kind of see the different butterflies. And originally there were two puts centered here at 955, and I went ahead and covered one of those and sold it again at 965. So I moved it up, and what that did is it flattened out the T+Zero line because it is sort of diving here a bit. And it gives the position a little bit more room to work and a little bit more comfort. As we went into the close today, this line's actually steepened a little bit more than it was during the trading day. So there's a little bit of question here in my mind about how much it's really diving down here into this 1025 level, but there is still certainly some sort of a dive there. So we're at negative 14 delta. If we hadn't made that adjustment, we would be at significantly more. And so that trade is analyzed down here. You can see the original order sold the 955 at 34.51, and then we covered it at 12.30 today. And I pulled those prices out of the order transaction history. So this is the trade that we're sitting in right now. What I've done here with the price slices today is I set the upper one to 1.2% higher, which also corresponds to about that 1016 level that we were talking about. So if we were to gap higher to that 1016 in the morning, we could expect to head right back to about that open loss that we had yesterday, negative 180. If the market was to gap lower, say 3% overnight or something like that, it would take us to about 975. And if that was the case, we'd have an open profit of about $200. So we're getting really close to expiration now for this trade. We have 28 days to go. The position is going to come into the money relatively quickly. So my hope is that if we can just kind of hang out in here somewhere, even if it's from 980 to 1020-ish, something like that, without pushing significantly higher up into new highs, we should be able to sneak out of this position sometime next week. And that would be great. If the market does push higher, makes it above that 1016, and we have to chase it up here to the 1035 level, which would be up here, then we'll have to see what happens. And the first thing that we're going to be doing is getting rid of this lower butterfly down here at 955. So that's all I have for now. Just be aware tomorrow we did have the down day, but there is always the potential that we can still go higher. I'm not saying we will or we won't, and we're never going to predict it. We're just going to kind of react to it and see how things play out. But this 1000 level is something to keep an eye on tomorrow and just see what happens there. So I hope it helps. If you have any questions, feel free to shoot me an email, info@thetatrend.com. Thanks for watching.